Millions of potential homebuyers are on the sidelines right now, feeling paralyzed. They're waiting for the perfect moment for something magical or some magical sign that it's the right time to buy. But what if waiting for the perfect moment is the very thing that could cost you in the long run? Media headlines can be confusing, and it's easy to think that waiting for lower prices or lower interest rates is the only smart move. But those headlines often miss the nuances of what's really happening in the local real estate market. So I'm going to break this down for you and why waiting for perfection in a financial or could be a financial blunder and a huge setback for you. Hi, I'm David Moore, local realtor and team leader of David J. Moore and Associates. And I've been helping home buyers and sellers navigate turbulent real estate markets like the ones we're in right now since 2005. Right now in 2025, we are in a fascinating point in the real estate market. The market is showing mixed signals. On one hand, buyer activity has been inconsistent, and pending home sales rose in October, flattened out the month before, were pretty much flat over the summer, and then we just saw a huge increase in buyer activity in November and early parts of December. Yet, the volume is still down compared to 1 year ago. This suggests that while some buyers are jumping in, others are holding back. The problem is, many buyers are basing their decisions on yesterday's news, and it's leaving them stuck in analysis paralysis. But the real estate, but the real mistake is often doing nothing. So, in this video, we're going to look at the biggest errors home buyers make and that they're making right now. The most important one that I see most buyers doing right now is they're trying to perfectly time the real estate market. And I'm going to explain why this strategy has failed buyers over the last couple of years and often fails them in any real estate market and what you should really be focusing on. So, the biggest problem and the biggest mistake in waiting for a fantasy scenario, which is mortgage rates drop back down to 3% or prices crash, and buyers have been conditioned to believe that if they just hold out, the market will magically become perfect. And they see headlines about interest rates and think, oh, I'll just wait. But here's the reality. While you're waiting, the market is shifting. Forecasts for 2026 are all over the map. Zillow, for example, has adjusted its forecast several times this year and now projects modest increase in home values between this year in November of 2025 to November 2026. Meanwhile, the National Association of Realtors is forecasting a 14% jump in home sales for 2026, driven by job growth and slightly better mortgage rates. And the conflict shows just how unpredictable the markets are. And I'm sure you could read a bunch of other resources that will contradict each other as well. Trying to time it can backfire. Imagine you find the perfect home and the one that you love and you can afford it today. But you pull back and you say, you know what? I'm going to wait for the rates to drop. In the months that you wait, rates may dip slightly, but that could also bring in a flood of other buyers, which is exactly what we've seen in the past several years, is that every time these interest rates drop, quarter point, half a point, more buyers seem to jump back in the market. And then what happens is it causes the home prices to rise again. So any savings that you would have off of an interest rate dip are going to be wiped out by the competitive market and the higher purchase prices. While mortgage rates are volatile, they change weekly, monthly, and forecasts from sources like Fannie Mae and NAR at the moment suggest that they will likely ease next year, but they're always going to remain above those pandemic era lows. I've been helping people since 2005, and I can honestly say I've never seen anything like that, and I don't think we'll ever see anything like that again. In fact, even post financial crisis, which was 2009, 10, 11, and 12, interest rates hovered in the high fives to mid sixes. And that's probably where we're going to stay. That's more of a normal real estate market. So right now, there's a brief moment where you're going to have negotiating power. And while this exists, which it exists right now, but it is starting to fade in some areas and other areas it's holding steady. Waiting could really be a gamble that could cost you a lot more money. So I would stop trying to perfectly time a real estate market. Instead, time your personal finances. The right time to buy is when you're ready to buy a house, you have stable income, you've saved up enough money for a down payment, or you qualify for grant programs that can help you with those down payment and closing costs. And the biggest, most important factor is when you can get pre approved for a loan. If you can afford the monthly payment on the home that you want and that meets your needs today, it's really time to act. Don't get married to a super low interest rate. Get committed and married to the house. You can always refinance your mortgage when rates come down during one of their fluctuating cycles. But you can't, however, go back in time and buy that house, especially if another buyer buys it. You could be waiting 5, 10, 12 years for that house to come back. And you're certainly not going to get it at yesterday's price. So focus on the things that you can control: your budget, your credit score, and your readiness. Two, this is the second biggest mistake I see people make. So think about this. You've decided to buy, you're excited, and you call your personal bank or a mortgage company or person that someone referred to you. And let's just say you get whatever mortgage that they offer you. It feels easy, and maybe your friend used them, so you kind of trust them, but it's one of the costliest mistakes you can make. A Lending Tree survey found that over half of all home buyers get only one mortgage quote. They just don't shop around, which doesn't make a whole lot of sense. I mean, think about it. Most people spend weeks comparing cars, TVs, ATVs, campers, and all of these things when they're looking to buy. But they spend less than an hour on the biggest financial decision of their lives. That's crazy to me. A tiny 0.25% interest rate difference in your interest rate might sound like nothing, but on a $400,000 house, that 0.25% can cost you $20,000 over the next 30 years. And obviously, a little bit every month. I mean, if you think about that, 20 grand is a lot. And that's something like, I don't know, maybe a new car or a college fund for your kids or a couple years worth of vacations. By not shopping around, you could be voluntarily not only limiting your purchasing power, but also setting your money on fire and just giving it away for no good reason at all. That same survey showed that for buyers who did compare, the best deal often didn't come from their first lender that they talked to. So this is a super easy fix. Get quotes from at least 3 or 4 different lenders. It's not going to negatively impact your credit, and it's worth the extra effort to call and get those things done. Be sure to include national banks, credit unions, mortgage brokers, or maybe the lender that your realtor refers to you. They can all be great resources for you and can help you find the best loan product that is available for you. And once you have multiple offers of financing, either turn to your trusted realtor or someone you know in the finance business and make sure you fully understand it and possibly leverage those quotes against each other. If lender A is offering you a really good deal, but lender B is slightly better and you like lender A, go back to lender A and see if he can give you a better offer. I've seen this work out for buyers many, many times. And this is one step that can save you thousands and tens of thousands of dollars over the course of a loan. Don't leave free money on the table. Number 3, another big mistake I see is people underestimate the total cost of owning a home. And this is a classic trap for first-time home buyers especially, but I see it in a lot of different home buyers in the market. So people get pre-approved, let's say for $500,000. They start immediately shopping at that exact price point. And they're so focused on what their mortgage payment is that they forget all about the other costs of home ownership. So let's break it down. Owning a home is little more than just a mortgage payment. You're going to have, things like homeowners association dues, maybe if it's a condo dues. And one of the things that's often overlooked is the maintenance on a house. Your water heater doesn't care that you just emptied your savings account for a down payment. And when it decides to break, that could be a couple $1,000 emergency repair that you didn't budget for. And this is how you become house poor, is not making sure that you have a budget for when things go wrong in your home. So make sure you're always accounting for that. You're not just buying a house, you're buying the roof, the HVAC system, the water heater, the flooring, everything that's inside of that house. And all of those mechanicals, those appliances, the stove, refrigerator, all that stuff has a shelf life and a life expectancy, and they will fail. So before you look at a single house, build a complete homeownership budget. It's more than just the monthly payment. Your monthly payment cost is going to be the principal, interest, taxes, and insurance on the loan, but you also want to factor in maintenance. So a good rule of thumb to work with is about 1% to 2% of the home's value for annual maintenance. So let's say a $400,000 house, you're going to want to make sure that you're budgeting for $4,000 to $8,000 a year, or somewhere around $700 a month, that you set aside or at least have available for maintenance and repairs to the house. Add that to the estimate of the payment and make sure that that payment's comfortable. If that total number makes you nervous, you might want to look for a less expensive house. No sense in making yourself house poor. Buying less house than you're approved for isn't failing. It's actually a really smart move. And some of the smartest home buyers I see do exactly that because it gives you breathing room and lets you enjoy the home instead of being a slave to it. So, if this breakdown is helping you see the market a little bit more clearly, do me a favor, hit the subscribe button. My goal is to give you real, unfiltered information you need to build wealth through real estate and have clarity through the home buying process. Your subscription helps my channel and it helps me reach more people just like you. So, the last one that I'm going to go over is another big mistake that I see. It's letting your emotions drive the bus when it comes to buying a house. See, you walk into a house and you just feel it. The kitchen's perfect, you can picture your kids or your dog in the backyard and you're in love with the place. And from that moment on, logic completely flies out the window and your emotion takes over. And this is incredibly dangerous. So when your emotion takes the lead, you start making bad concessions. And here's what I mean by that. The inspection starts to show there's a potential foundation issue. You might say to yourself, it's probably not that big of a deal. Or maybe the commute's a little longer than you wanted. You're like, I'll just wake up a little bit earlier. And you end up in a bidding war. Or you end up making some sort of concession to yourself and sliding the risk of the transaction onto you. Like, I don't know, waiving inspection contingencies or something crazy like that. And all of a sudden, you get through the inspection process or you get this house and you've ignored a bunch of these red flags only to be stuck with a huge repair bill and a home that you can't sell or you can sell maybe at a loss. So you really want to separate the house from the deal. Before you even start your home search, make a non-negotiable checklist. Include like your absolute maximum budget. Remember, we just talked about that. So that's mortgage payment plus a little bit of a reserve for maintenance and repairs, location requirements, and then have deal breakers like no major structural issues or no HVAC systems over 30 years old or no roofs over 20 years old. And then use this checklist as your anchor. When you view a home, check it against the list. And before you let yourself fall in love, make sure that that house meets your requirements, and lean on your real estate agent. They are there to help you with this. A good agent isn't there trying to hustle you into a house. Their job is to be the objective voice of reason and really help you find and see some of these red flags. So if they're warning you that you might be overpaying or there's a red flag or a major issue, listen to them. A great agent isn't just there to sell you a home. They're trying to stop you from buying the wrong one. So let's recap these biggest mistakes that I see buyers make. Trying to time the market perfectly, not shopping your mortgages, underestimating total cost of ownership, and letting your emotions drive the bus from the purchase. And worst of all, what I see, and this is part of the emotional side, is letting fear creep in to keep you renting forever. The narrative that you should just wait on the sidelines is really risky advice. The current market is complex, and we understand that sometimes, based on your situation, renting is the perfect option. But more often than not, owning a home is a better solution for most home buyer or for most people out there. It's a true way to build wealth, and it gives you a lot more stability in your life. So make sure that you make a smart home purchase. And a smart home purchase isn't about predicting the future. It's about being prepared. It's about being ready to act when the right property, the one that fits your budget and your lifestyle, comes along. So to help you get prepared, I actually have a home buyer's guide checklist. So basically it's going to walk you through every step of building your budget to making your first offer and what to expect throughout the home buying process. It's completely free. And if you'd like a copy of it, you can simply text me at 443-733-6477. Just type in the words home buyer checklist and I'll get that right over to you. Or you can send me a message or comment below. Look forward to seeing